Good afternoon and good morning, everyone. Thank you for joining us. Welcome to the UN-convened Net Zero Asset Owner Alliance Draft 2025 Target Setting Protocol Consultation webinar. We're very pleased to have you with us. The Alliance is convened by Principles for Responsible Investment and the UN Environment Program Finance Initiative in partnership with WWF and Mission 2020. It is an asset owner-led alliance, and today I'm joined by 9 panelists who will walk us through the details of the 2025 target setting protocol. A wide range of institutions and expertise are represented on the call, and I'm pleased to bring them in the next parts of this webinar. The agenda will run through all of the aspects of the protocol, from the setup of the alliance to the structure of the MRV track, which is responsible for the 2025 protocol, as well as each of the elements covered underneath the protocol. We'll then have a 30-minute question and answer session where participants from the audience can share with us in the chat their questions to the drafters of the protocol. So it's my pleasure to welcome you to this webinar and to give you a bit of background on the Alliance. The Alliance is presently 30 asset owners with $5 trillion in assets under management that have committed to making their portfolios net zero by 2050, regularly reporting on progress every 5 years in line with Paris Agreement Article 49. The commitment emphasizes real-world emissions reduction, and does so especially through advocating for and engaging on corporate and industry action, as well as public policy. The commitment is made in the expectations that government these efforts. The 2025 draft protocol is a product of first track of the 6 tracks that are meant to support the implementation of the Alliance commitment. The monitoring, reporting, and verification track developed the 2025 protocol as its first deliverable in this inaugural year of the Alliance. And it's my pleasure now to turn over to the leads of the MRV track, Udo Ries, Head of Risk and Monitoring at Allianz, and Claudia Boyle, Head of Responsible Investing Swiss Re, who will walk us through the overview of the protocol. Udo, over to you.
Thanks, Jess. Hello, everyone. Just a few general remarks on the protocol. The protocol was released last week, October 13th, and it's now open for public consultation for the next 4 weeks until 13th of November. And we are really looking forward for any additional input, proposals, whatever you might have. The protocol is really meant to be ready for use to set targets now in the next 6 months. So it's based on available methodologies, and it will also be developed further on a yearly basis. We all know that the methodologies will develop, data coverage will become better, and also the scope and asset classes we will increase over time. So our approach is it should be always an implementable protocol, and we will looking forward to see a yearly release cycle on the protocol in the next years. Next slide, please. The protocol has 4 main layers. And these 4 layers represent the 4 different action points asset owners have. So the first one is taking care of the sub-portfolio of listed public equity, listed corporate debt, and real estate. These are the asset classes where we think the methodology is progressed enough to set targets. Then on the high emitting sectors, we will have sector targets. We start with oil and gas, utilities, steel, and transport which of course can be seen as Scope 3 or part of Scope 3 for oil and gas companies. We will have engagement targets, and we will have financing transition targets, really displaying the role of asset owners providing capital to the transformation. It's our view that all these 4 layers are equal important. Only if we as asset owners pull all 4 layers at the same time, we will see the necessary change in the real economy and the necessary transformation in the next years. We will go into the details later with all the specialists in the different 4 layers, but before that one, Claudia will give you a little bit introduction on our process, how we really came up with this target setting protocol. So Claudia, handing over to you.
Many thanks, Udo. I hope you can hear me well. It's also a great pleasure from my side to have you here. As you can see, we already celebrated our first year anniversary with the Asset Owner Alliance, having started in September. Ultimately, kicking off the process to develop the target setting protocol started around December, January, having had then around 50 members. Our approach was always being inclusive, so that was, we set up this stream, discussed across all members what are the feasible and possible items to be considered. We also collaborated, as you can see, with many external initiatives, organizations such as SBTI or PCAF, to also collect their view, as we also outline in our draft protocol. After having developed our approach, we then shared that with our steering group to get a first sign-off, to afterwards go into road testing, which we conducted through July until September. The road testing was mainly to test to what extent the targets we would have in mind are really implementable, feasible, and also where we would have sufficient data from a quality and quantity perspective. After having collected the feedback from all our members via of the road testing, we then finalized our draft protocol, which we then happily launched just a few days or 1 week ago. So as mentioned, we currently have 30 members in the Asset Owner Alliance, and on the way we developed, of course, we considered not only the first 15 members, but we also took into account and the members who joined afterwards. So this protocol really reflects the various type of investment strategies, operational setup, as well as other constraints to make sure everybody is able to set targets. With that, I would like to hand over back to Udo. Thanks.
Thank you, Claudia. It's my pleasure now to welcome Peter Sandahl, Head of Sustainability at Nordea Life and Pension, to speak to us about the Alliance Theory of Change.
Thank you, Jess, and hello, everyone. Much appreciated that all of you have taken the time today to participate here. I'm going to say a few things about the section we call Theory of Change and our potential management action. And with respect of time, I will not go into the detail, but instead try to highlight a few things which we believe are important to bear in mind when going through and reading the rest of the protocol. As asset owners, we have a rather unique role in today's financial landscape. We have long-term investment horizons, and we invest across a variety of different asset classes. As such, we are not only acutely vulnerable to the systemic disruption that climate change will cause, but we are also playing a key role in catalyzing the transition to a low carbon and climate resilient economy. And what we aim to address with the section Theory of Change is how this role can materialize, how investor impact can be described and understood, and what mechanisms and strategies that are available to investors today in order to contribute to this transition. Doing so, we have reviewed a large amount of the existing literature in order to discuss and argue around this topic in an objective way with empirical evidence as an important cornerstone. And the Alliance commitment has several distinguished features, of which one of them is that our actions and efforts needs to emphasize real-world outcomes. So using the information we have today, we aim to argue and discuss how different mechanisms and strategies might both support the objective of reducing emissions and being able to create real-world impact. And in relation to this, we believe it's important to highlight a few things. The first one is that reducing emissions in an investment portfolio is not necessarily the same thing as contributing to emission reductions in the real economy. The ability for investors to create an impact will depend a lot on various factors, asset classes, etc. The second thing is that investors might want to or need to reduce emissions generated from their investment for many different reasons. For example, there might be a need or a wish to reduce climate risk exposures. There might be commercial reasons why you want to reduce exposures in certain companies or sectors. There might also be a need to change the portfolio to reach certain targets, to meet your fiduciary duties, or actually to contribute to a change in the real economy. These different reasons or needs are not always compatible to each other. And the third thing is that all asset owners are unique. We all have our different constraints and our restrictions to consider. Markets and regulations differ, and the fiduciary duty needs at all times to be our guiding principle. And these things will affect the ability for how and in what pace we can change our portfolios and which strategies that asset owners might want or need to deploy, depending on their unique circumstances. And lastly, I think it's worthwhile mentioning that translating complex climate models into investment portfolios is not a straightforward task. We know that many issues are still unsolved. We don't have answers today to all of these issues, but we believe that progression beats perfection in this domain, and we don't have the time to wait. And as mentioned before, over time, we will refine, we will adjust this protocol as we get wiser and as data availability becomes better. Over to you, Jess.
Thank you, Peter. I'd now like to return to Udo Rees of Allianz, accompanied by Sadif Sutterheim, Real Estate Strategist Investment Management, Zurich. Over to you.
Yeah, it's me again. So the first asset classes we deal with is real estate, where Sadaf is talking later on, listed equity and listed corporate debt. The first point, what is really important for us, is that we start a consistent measuring through all the assets on our balance sheet, including, for example, mutual funds, directly held assets, whatever is on our balance sheet. That is so important. We all believe in what you don't measure, you can never manage. So really, and that's a huge effort for all asset owners to implement that one with external asset managers, internal asset managers, to really have consistent data as a starting point. We worked a lot with the IPCC scenarios, and we derive an ambition range of -16 to -29% emission reduction, CO2 equivalent emission reduction in the next 5 years. this is on the one hand side what science is telling us. On the other hand, it leaves enough room that it can reflect the different starting point and the different constraints of all the asset owners in the alliance. Then it's the discussion about absolute and intensity-based targets. We know that the emission budget, which is left for 1.5 degree, is an absolute budget, and that intensity-based targets, of course, they need to reflect additional the GDP or production growth in the next years. But we are at the moment still open for both type of targets for two reasons. The one is we want to be open and we expect really a consolidation, a move towards best practice in the next years. We see a regulation kicking in the European Union and elsewhere. So we will not be a front runner for coming regulation on the one hand side. So we keep it a little bit open. On the other hand, we are really convinced that in the next 5 years, the difference between absolute and intensity will not be so huge, because we take 2019 or earlier as base year. And with the economic decline based by COVID-19, there will be just the same level of production in 3-4 years. So in the next 5 years, it's really not decisive. We all know where to go, and it's about starting to go in that direction, implement a consistent measurement throughout the company, and then really start to manage your emissions in your portfolio. That's the most important part for us. With that said, I would hand over to Sarah from real estate.
Sarah, are you maybe muted?
Sorry. Yes, I was. So hello everyone again, and thanks Jess, and thank Udo and Peter and Claudia for the great description. I'll just dive in directly on the what we are doing on the real estate side. So as the Alliance, we are recommending that we set absolute targets on fully and jointly owned real estate portfolio. So taking all our asset under consideration on setting targets where possible. On the sector side, we will be looking at both residential and commercial buildings, and taking both the scope 1 and 2, and also recommending our Alliance members, where possible, to set targets on our scope 3 emissions. And when we say scope 3 emissions of the tenant, we are talking about heating and electricity emissions of our tenant. As we all know, that 60 to 80% of our building is run on the tenant emissions. So setting a target onto that is definitely into our criteria of reducing the carbon emission in the built environment. So we are having very ambitious targets there, but we are still trying to take that into consideration. So we're looking at both at the landlord-controlled and the tenant-controlled area, and we are leaning towards or using the approach of the CREM model, which is the carbon risk real estate monitor by the EU-funded projects. If we go to the next thing, for our coverage, we are actually looking for the tenant area, as I said, and also for the landlord area. And we're setting targets on either we have the option of setting targets on our real estate as a portfolio, or we are also recommending that we can set targets with equities and with other asset classes together. If we go to the coverage area, we do have Alliance members who doesn't have data, and we all are facing the same situation, and we might not be able to take all our buildings because we might have runoff buildings, or we have buildings where we have a short-term investment portfolio. So to be transparent among our members, we are talking about setting a target on the available data, and actually saying that maybe we are setting target on 80% of our total floor area under management or 75% area, and how do we plan to get the other 30% or 25% in the later phases. So from stage 1, we want to be transparent on what we are setting target on and taking that into percentage of total gross floor area covered by our targets. Then, as I talked about data availability and estimation, we all have the same problem that we don't have the tenant area. So we are at this stage estimating our tenant area, and we want to be also transparent there, and we might discuss our estimation methodology among the alliance members and the proportion of the area or the data that is estimated. We will also talk about in our reporting that how much of our area is estimated and how much real-time consumption data that we have. Then we are also talking about the next level, which is the key levels for emission reduction. So what are our different levels there could be? We are talking about changes in energy mix. We are talking about tenant engagement. We are talking about improving the building energy performance and also investing into new buildings which have lower emission intensity. We are also had a lot of discussion about divestment, and we do not see divestment as approach towards getting less carbon reduction. We want to go with efficiency measures, and then we want to look at the retrofits first, and then the second step would be looking at the greening of our electricity and maybe offset renewables, and maybe if nothing works on, then we can talk about divestment. For our embodied carbon at this stage, we talked about that embodied carbon is a big carbon emission, and we at this phase we will not be taking the embodied carbon in phase 1, but we will definitely work on the methodologies of integrating embodied carbon, and probably in the next step we will talk about how we will take embodied carbon also into our targets. So at this stage we are actually talking about taking the externalities, the negative externalities into our investment and deploying our capital towards more sustainable investment. So that is the idea with the real estate at this stage. And we are being very ambitious. I must want to say again that as the whole group, all the members, that we are setting targets or planning to set targets on a tenant emission, and trying to take the tenants with us through tenant engagement, green leases, memorandum of understanding, and trying to reduce that carbon in the built environment. Thank you. Over to you, Jess.
Thank you, Sadaf, and thank you, Udo. Over now to our second layer of sector targets. Sustainable feasibility upgrade, AVA, and market through Nordic Sustainability Store brand. Sorry, JF, you're muted. It looks like.
Sorry. Good afternoon. The second pillar of the protocol consists in the very important sector targets. So I'll focus on the I and W, with my colleague Marcus from Store. Targets can be set at a portfolio level. Setting sector targets allow to create a very important link between portfolio level reductions, sector level carbon efficiency requirements, and real world reduction in CO2 equivalent emissions. Sectoral targets track changes in the underlying portfolio holdings at a sector level in line with the net zero trajectory. Sector targets also feed into Alliance members' engagement efforts, as it provides an indication of expected emissions performance sectors that can be communicated in turn to individual company and industry associations. Since it wasn't possible to get sector pathways for all sectors given our ambitious time frame, we've decided to focus on the highest emitting sectors, which also align with engagement track efforts. The list of sectors in scope at this stage includes oil and gas, utilities, including coal, transport, including civil aviation, shipping, road transport, and steel manufacturing. These sectors represent, in combination, around 50 to 60% of total carbon emissions. Sector targets are set in reference to a global carbon budget available to reach net zero. This budget is allocated across economic sectors and geographic locations, using a set of economic and technological assumptions compatible with a 1.5 degrees pathway. At this stage, we have identified 3 available 1.5 degree models, so namely the One Earth climate model, the Investor Leadership Network pathways, and the Cambridge Econometric E3ME model to set sector targets. These models consist in a mix of bottom-up and top-down sector pathways. They will be compared between each other in order to establish a corridor of possible quantitative sector targets. The climate science-based One Earth climate model, developed by the University of Sydney, and which has been peer-reviewed by a number of climate modeling organizations, represent the cornerstone of our sector modeling approach. The One Earth climate model is a model relying on the deep decarbonization assumptions. It will be used as a first reference case with which to set sector targets at 5 years interval to 2050. The exact date still needs to be confirmed, but it looks likely that the report detailing the One Earth climate model assumptions and results will be released by mid-November. So I will now hand over to Marcus that will talk us through how sector targets can be set at the portfolio level. Thank you.
Thank you, JF. So the One Earth climate model provides sector decarbonization pathways for both total CO2 emissions on scope 1 and scope 2, and on a sector product/production specific level using an output intensity metric. This allows us to set 2 different types of sector targets. So the first is the product or production specific sector targets that, for example, can be measured in CO2 equivalents per ton of steel produced, or CO2 equivalents per kilometer of the produced cars. The second is a carbon intensity based sector targets that, for example, can be measured in carbon intensity by revenues or enterprise value for example, the steel sector. This is also aligned with the calculations in the sub-portfolio section. So one of the positive things with using the product or production specific sector targets is that these are largely independent of economic variables such as revenue and have no market or price volatility. So this makes it easy to track the real emission reductions in isolation and also to compare performance between companies. However, we have seen that the lack of data availability or unreliable or weak data has been an issue for several asset owners. Carbon intensity-based sector targets, on the other side, have easily accessible data, but it is dependent of economic variables such as revenue, and only covers scope 1 and 2 in the sector decarbonization pathways. For these reasons, we recommend to use the product or production-specific sector targets if data allows, or use the carbon intensity targets in conjunction with absolute emission targets if it doesn't. The reason why we do not recommend only setting targets on the absolute emissions level is to limit the risk of divestments and stimulate emission reductions in the real economy. We also recommend then to set the targets on scope 1 and scope 2, as well as tracking and reporting on scope 3 data. We've discussed a bit on how we want to tackle scope 3. For some sectors, like for example, the automotive sector, we have scope 3 metrics on the product or production level, and would in these cases recommend to use these targets. But when it comes to, for example, the scope 3 emissions in the oil and gas sector, we have focused on the demand side, like transport and industry. But as a next step, the Alliance also aims to clarify the definition of scope 3 emissions for the oil and gas sector, and also provide an open source data for the largest oil and gas companies within the next 3 years. The Asset Owner Alliance also commits to play a role in making data accessible to the investment community through an open source data initiative taking place within the next 3 years. The goal here is to increase the data availability for product or production data per high emitting sector. Lastly, I can also mention that we expect that the implementation of the economic activity disclosure in the EU will increase the data availability, at least for European companies. And back to you, Jess.
Thank you so much, Marcus and JF. We'll now move to engagement targets, the third layer of targets underneath the 2025 protocol, with Elena Cherrier, Deputy for Group Sustainability Policy, CAS de Depot.
Hi, everyone. Thank you, Jess. So on the targets, the engagement targets, as you know, the Alliance members have put engagement at the heart of the Alliance commitment by having committed to engaging on corporate and ESG action for low carbon transition. So I think as other members have expressed, engagement really is a key lever in the AOA theory of change. And that is why engagement targets feature as a necessary component of the target setting protocol. So what the protocol is doing is it's really suggesting a process for defining 2025 engagement targets by suggesting that individual members should identify their top emitters and set targets to engage with them according to their different engagement style and capacities. So to manage that, we have defined engagement scope, which is all engagement activities that are aligned with the Alliance aim of driving companies to commit to net zero greenhouse gas emissions across their value chains by no later than 2050. And this engagement can take various forms. It can be either direct bilateral engagement and or collective engagement and or engagement that is performed on behalf of the asset owner by asset managers. This engagement can also cover engagement that are performed under the AOA activities, but also through in-house engagement activities. And last, these action-based engagement targets can be complemented by an outcome-based target, where we suggest that Alliance members use portfolio coverage, that is to say the proportion of companies that have defined an SBT, as such an outcome-based target. Though, of course, we also warn that members should be wary of claiming full attribution for this outcome. And so that's the process that is aimed both at guiding the members in the climate engagement target setting, as well as enabling the Alliance as a whole to assess its engagement activities and have an idea about their outcomes. And with that, back over to you, Jess.
Thank you, Elena. For our fourth layer of targets, I'm pleased to invite Sonia Sedelmeier-Petu, Global Head of Sustainable Investing, Allianz.
Thank you, Jess, and also from my side, hello everyone. Thanks for joining us here. I would like to speak about the financing transition work stream and our main goal. So we generally have three main goals. One of them, which is the enhance the supply side, is kind of the overarching goal. And enhancing supply side means for us that we want to help build solutions and contribute to enlarging climate solution investments. When we speak about climate solution investments, we look at investments that significantly contribute to climate change mitigation and or climate change adaptation. The second big goal is build up sector and asset class expertise, because this will help us to enhance the supply side. And in a third place, we will also report on the progress on climate solution investments. In the 2025 target setting, we have put out some metrics. How do we want to measure the progress of this work stream? Because if you look at the current technologies and the current solutions, some of them are not investable yet, some of them are not scalable yet. So there is a lot to do, and we hope that these key metrics that we set out for us will help us to get to the point where we can really invest. And so one of them will be conduct 3 to 5 roundtables on sectors by 2025. This will serve us to build up the sector expertise and also to do deep dives into the value chain to get a better understanding. Also to connect with relevant stakeholders that work on solutions that increase the supply side. And of course, above all, kind of from a financing transition perspective, to identify the solutions and the investment opportunities. The second set of metrics is around establishing working relationships with 5 DFIs or other partners for 2025 to, on the one hand, enlarge the coverage in terms of geographies, but also to de-risk investment solutions. So we're seeing that some of the solutions from a risk-return perspective would not really fit from kind of a large investor perspective. So we need vehicles and instruments to de-risk. We hope that in collaboration with other DFIs and other market players, we can achieve that. And as already said, we will collectively report on the progress. And I would like to stress out that I think this is relevant for all work streams, but especially for the financing transition, we do see collaboration with other tracks and kind of beyond the Asset Owner Alliance will enable us to come up with a more cohesive and coherent approach to really have the possibility to finance transition. Thank you.
Thank you, Sonia. It's now my pleasure to invite Thomas Leash, Lead Climate Integration at Allianz, to speak about our final component of the target setting for carbon.
Thank you, Jess. Good afternoon, good morning, everyone. So the policy advocacy work of the Asset Owner Alliance is one key component. We're depending on policy frameworks which enable the change in the real economy eventually. But asset owner members and probably also asset managers are relatively new to policy advocacy topics, I'd say. We found that usually asset owners are a bit shy and stick to the herd, so to speak, sign letters with 200 institutions signing up, which is one important component. But directly engaging with policymakers on also real economy issues is something which is not so common, but absolutely necessary to get an investor and especially an asset owner voice heard, which has skin in the game, because we have or will set targets and will need to engage on real economy companies, but also policymakers to make this change happen. So in the track, we are developing, first of all, also input from our end to, for instance, policy consultations, regulatory consultations, also aided by PRI's policy work, which is extensive and also covers the jurisdictions we have in focus, which is the US, UK, EU, Japan, and China as major economic blocks where we also have considerable exposure to from our investment portfolios. Based on this input, we are also directly engaging policymakers, be that bilateral meetings, be that multi-to-multi meetings, which are a bit limited due to Corona, but still can happen also virtually, and also via things like public letters or private letters. So far, the AOA has been active, for instance, on the topic of green recovery, but also on regulatory consultations in terms of disclosure requirements on real economy and financial sector companies. This work will definitely support the work of the other tracks, but also be supported by the other tracks. For instance, from the MRV track, we are informed about the metrics and the disclosure investors need, and this should be fed towards regulatory or standard setters. On engagement and financing transitions, it's obvious that we will face certain policy barriers within these sectors and within these value chains, and this is also something we can and need to address in our policy work. And last but not least, also sovereign wealth funds are asset owners and can be engaged by us, so to speak, to also sign up for decarbonization targets and the Asset Owner Alliance. And this is something also where our policy work can and should aid. And with that, back to Jess, please.
Thank you, Thomas. That now completes the elements of the target setting protocol. I'm now really pleased to invite Claudia Bully, Head Responsible Investing Swiss Re, to speak about how we'll report against.
Thank you very much, Jess. So we talked extensively about the target setting, but what are targets without having them monitored and reported? So to make sure we can monitor our progress on our journey, our ambition is to report these in two ways. So first from the members to the AOA as an organization, but then also the AOA as an organization to our stakeholders, means the external world. So, but before we report on the targets, the first step is, of course, to submit the targets, which would also be via a reporting document. Any member who joins newly the Asset Owner Alliance would be required to set targets within 12 months, except the period they joined is shorter than 3 months until the reporting starts. So means maximum period is 15 months they get until they need to set targets. We committed to having net zero portfolios by 2050. As this is a long journey, we committed to set targets at least every 5 years. So that means every 5 years we would need to come up with new targets, each of us as a member on its own. During this period of 5 years, of course, targets can be revised, and when new asset classes are added, targets can be adjusted, especially in the beginning periods, right? And we are just in the ramp-up phase. We cover now listed equities, corporate credits, but further asset classes are coming soon. As already mentioned, the earlier stage when I described how we developed target setting protocol, we also considered for setting up the reporting, the various existing frameworks in the market. Why did we do that? We are very much aware that our members have to report to many other initiatives and organizations they are part of. And our ambition is to not duplicate any reporting metrics, but to leverage information. So in that way, we had really a look across the world, what is available, what does exist. Also finding out which ones are the metrics which are mostly used when it comes to reporting. So first of all, you would need to submit then the targets, right? For that, we set up a framework. Afterwards, every year, members will report quantitative and qualitative elements to what extent they are on track to meet these targets within a 5-year period. That is collected at the AOA level. Additionally, the AOA will then share, at least on a 5-year level, quantitative information, but in between also qualitative information. We are currently collaborating with the SBTi FI to allow for validation of Allianz targets to also there generate synergies by submitting just once targets. So, but as you could imagine, the reporting framework depends very much on how the target protocol will look like. So in that way, as we now collect feedback for the protocol, that will also be reflected in the reporting. With that, I would like to hand over back to Jess.
Thank you so much, Claudia, and thanks to all of our presenters. I know we're running a bit over time, but I think we've made some of that up. Now we'd like to move into the question and answer portion of this webinar. We've had a few questions coming through over the chat, and I would encourage others to submit questions as well as we start to move through these first few. And I'll go back to sharing all of our panelists together so that you can simply see all of us at once. So with that, I'd like to move to our first question to Marcus Bruns at Storebrand. If you could please react to a question from the crowd on what will the Alliance utilize the IEA recently released Net Zero 2050 scenarios, and what's the view of the Alliance on that?
Yeah, so it was interesting that they came up with this scenario. So several of the members in the Alliance have also been pushing for a 1.5 degree scenario to be included in the WEO. So one of the issues with this is both on the granularity of the data in these scenarios and also the time limitation. So this only goes until 2030 and not 2040 like the others, and also the extensive use of CCS. So what the scenarios don't tell us, at least from what I've been reading, is it does not tell us a global, for example, the global oil or coal demand up to 2040, or the, for example, the estimated present value of the future oil and gas natural productions. So we will, of course, look into this and see which data we can extrapolate. But as of now, we don't see this as a kind of a full worthy enough scenario to be used in target setting as a standalone product. But we will continue to push the IEA to include more granular information in their future scenarios.
Thank you, Marcus. The next question is on what asset classes we will cover next, and I'd like to turn that to Udo Rees.
Yeah. Next asset class is, of course, sovereigns, and we try really to not only deal with sovereigns, but also sub-sovereigns and supranationals. So that's the first one. And the next one we will cover thereafter is infrastructure. And these are those where it's really more or less straightforward. Then commercial real estate mortgages, of course, where we will follow just what we do on real estate equity investments. Beyond that one, at least we will see really how methodology develops and data develops. From our perspective, you need both a sound methodology and real data, because for us it's really on managing portfolios with those data, and here we really need reliable data to take decisions on. So it's after sovereigns, infrastructure, commercial real estate mortgages, we're not sure what will then be the next one, but the next three is pretty straightforward, I would say.
Thanks so much, Udo. Another question came in on our partnership with PCAF, which Claudia highlighted at the beginning. And I'd like to turn that over to Peter Sandell to react to. Could you please elaborate on the partnership between the Alliance and PCAF? Peter, I see you talking. I'm not sure if others can hear you, but I cannot.
Okay, is it working now?
Excellent, thank you.
Perfect, I was double muted. Okay, but as mentioned, we recently entered into a more formal partnership or collaboration with PCAF. I think financed, proper carbon accounting for financed emission is the cornerstone and foundation for being able to set targets and to transition portfolio. Of course, PCAF's work is an important part of the Alliance commitment. And as we want to avoid to kind of develop things in parallel tracks or duplicate work, there was a clear logic for us to team up with PCAF, both to kind of give our input to the current asset classes and methodologies covered by PCAF as a continuous refinement of the methodologies, but also to collaborate on the methodologies and accounting practices for new asset classes. And I think sovereigns will be a very important part as the next step for us to collaborate together more in practice with PCAF on how to develop that and make sure that we are aligning our methodologies and thinking.
Thank you so much, Peter. If I can turn now to Sonia, the question there is, how do you see the development of the financing transition track target as we move towards developing those more quantitative elements for asset targets?
Yeah, thank you for the question. So I would see it in a way that, of course, we would need to get more concrete and more kind of on a quantitative side in terms of looking at the portfolio. So we would envision that when we start the relationships, for example, with the DFIs, we can really structure and come up with new types of instruments and vehicles that would help us to invest more and to create more inflows into the areas of financing transition. So I think with that, this would be something that could be kind of added on the reporting then to really see how are we moving towards investing more into investments that help financing the transition. So this is something, and the other thing would be that on the sectors. So I think first, we need to build up the expertise, as I said, but then we really need to come up with possibilities also in terms of asset classes, for example. So what would be the investment possibilities? How can we also there create more inflows into the sectors that need the financing to transition? So that would be the idea, and this is also something that going forward we could report on.
Thank you so much, Sonia. We've had a few more questions come in around Scope 3 on SBTI-FI, so we'll just keep moving through them. The next one is on, are there thoughts on including a specific timeline for Scope 3 integration? For example, as in the EU principles, this would send a strong signal to data providers and improve availability of data. So Marcus, you touched on this a bit already under the sector targets, but that also applies under the portfolio target. So I'll turn first to Marcus and then to Udo to speak on Scope 3 timeline inclusion.
So far, we haven't set a specific timeline for Scope 3, but we, as I mentioned, we are looking at, for example, the oil and gas industry, and we will be looking at that within the next 3 years. But I don't know if you have anything to add in addition to that, Udo.
Yeah, maybe to add, can't be our role to set first targets and then hope that the data are somehow available over time. We are responsible for 5 trillion assets under management, and we set really targets on that one, and we need reliable data. So it's not that we first set targets, so we are fully dependent on data quality out there. Whenever we have the impression that the data quality, the data coverage is sufficient to set targets, we will do so, but not before.
Thank you, Udo. Then I want to turn to the SBTI-FI question. So the question is, why hasn't the Alliance simply endorsed the SBTI-FI approach? And Claudia, you spoke to the collaboration with SBTI-FI, so I'd like to turn first to you to react on that question, and then to any other colleagues you might want to add.
Yes, thank you very much, Jess. As mentioned, right, the AOA started a year ago, more than a year ago, and at that point, the SBTI-FI was also just in the developing the framework we just released, right? And ultimately, what we also experienced and what we still think is not yet fully developed or what is still in process is the 1.5 degree pathway, right? So ultimately, we saw it as our requirement to investigate what makes sense for us as asset owners and to what extent can we implement the methodology. So to really make sure we have something tangible, so something achievable. But of course, we collaborate very much with SBTI-FI. by also now try to make sure, right, that the targets by the AOA would also be approved by the SBTI. So we see it as a close collaboration. However, we more or less worked in parallel. But probably, Udo, you might also want to add something in addition to that?
Yeah, maybe one additional point. You see, of course, in our sector targets, great alignment with the SDA approach. On the temperature tool, we did set out the methodology call. We are not fully convinced that the methodology is advanced enough to set targets on it. That will develop in the next years, we are pretty sure. And yes, also our framework is a little bit broader, also stressing much more the financing transition component in it, which really shows or displays the role asset owners have to play in the transition. So that's, but yes, as Claudia said, we are in good discussions with SBTI. Hopefully they will also allow AOA target setting scheme as an admissible method over time.
Thank you, Udo. Another question that came in, we'll just ask it as it was submitted, is to the policy lead, Thomas Leach. What is the budget for the policy work, and are you hiring specialists to deliver government lobbying?
Interesting question. No, we won't hire anyone. We will make use of the resources we have in the Alliance. We have 30 members now. A lot of them have regulatory affairs personnel. They have sectoral expertise. We will also make use of what UNIBFI and the PRI are offering in their policy work. Most of us are probably members of the Investor Agenda and the associated organizations like IIGCC and so on and so forth, which conduct policy work. So I think we have something to bring on the table already, and we just need to leverage the resources in our houses because this is asset owner led. And therefore we should also do it on our own and not hire someone else conducting it for us.
Thanks so much, Thomas. You also, together with other colleagues on the call, led some of the work on developing the range of decarbonization targets for the sub-portfolio level. Could you maybe speak a bit to the scientific analysis, or the analysis of the scientific scenarios that went into that?
So we started basically with the IPCC special report on 1.5 degrees and took the scenarios from there. We aligned our approach also with, for instance, the Potsdam Institute and the Cicero Institute and so on and so forth. We eventually made use mostly of the no and low overshoot scenarios and also looked into the high overshoot scenarios, but found that these go like quite deep in terms of the ambition level sometimes and relying a lot on carbon removal, obviously. So therefore, we cut out the least ambitious scenarios in general and now have this range of -16 to -29. Also vetted with the academia institutions, which I mentioned before.
Thank you so much. Okay, well, as the questions are kind of rolling to a slow, I'd like to maybe turn to each of you and ask if you wanted to highlight one element that you think is most innovative or one element that you are looking forward to developing further under the target setting protocol. So really a sort of final reaction from you on your view of the protocol and where it could lead to from your respective position in the Alliance protocol drafting groups as owners of different areas of the protocol. So maybe I'll start with Udo and we'll move through the group.
Yeah, for me, the most important point are the 4 layers, the 4 parts of the protocol. Really, asset owners need to work jointly on all 4 layers. That's the most important part of the protocol from my perspective. Thanks, Jess.
Thank you, Udo. And we'll just go through in the order that we presented. So with that, if I could maybe move to Sadaf, is there anything on real estate that you're looking forward to with respect to next steps? Any other final thoughts you have on the whole?
Absolutely, Jess. What we are looking forward in real estate would be estimation methodology and how we are estimating our tenant data. And if we can come to a common methodology onto that, it would be wonderful for all the asset managers, I would say. Thanks.
Thank you, Sadaf. Over to JF on the sector targets.
So yeah, on the sector targets, I think that's a key piece. That's really on the create the link between the portfolio targets and the engagement. So it's really one of the angular stone of the cornerstone of the framework. Also, what's important to note is that we're trying to reconcile by setting what should be done from a kind of science basis and what can be achieved. To finally point out that to our collaboration with the University of Sydney and the development of the One Earth climate model, I mean, that's the only 1.5 degrees scenario that's available, kind of mapping sectoral efforts across geographies. So that's, please stay tuned in November and when the OECM report is released. Thank you.
Thank you so much, JF. And in addition to the OECM report on sector decarbonization pathways being released in the end of November during the Race to Zero dialogues, we should also highlight that the Alliance is working to expand and increase its collaboration with scientific advisory groups. So the Alliance will soon be issuing a call for reaction from the scientific community to join a scientific advisory board. So please look for that. Over to you, Marcus, with the same question, please.
I think I'll just echo what JF said, and then also it's going to be interesting to see how the different companies in these high-emitting sectors react to what is actually needed within the 5 years. And I really hope that we'll have good and constructive dialogues with at least starting with the leaders in these sectors to make sure that we're actually on track for the next 5 and 10 years. That's going to be a really important part.
Thank you. Over to you, Sonia, on the financing transition targets.
Thank you, Jess. Yeah, so I'm very excited about actually the deep dives into the sectors and really seeing the new technologies. And I think also for us as large asset owners, I think it's also kind of a new step that we will, look into new things and really kind of hands-on try to come up with solutions. How can we create instruments so we can really kind of foster the investments? So this is what I'm looking for. Yeah, thank you.
Great, thank you. Thomas, on policy?
I guess the game changer really is that asset owners set themselves targets and need to report against that. As like the expression probably is skin in the game, that this changes the whole dialogue also with policymakers because they realize these are institutions who really committed to something and now they're working constructively to get it done. And this probably also extends to the other tracks. It changes the tone and the conversation quite significantly.
Thank you. A certain robustness to those dialogues now. Peter, you kicked us off at the beginning after our leads introduced the overview of the MRV track and of the process of developing this protocol. And you spoke to the theory of change. Is there anything you want to reflect on now that you've done a deep dive into the various elements of the target setting process?
It's always difficult to be last, trying to be finding something to say that hasn't already been said. I think 2 short things. First of all, I'm really looking forward to continue seeing this collaboration between the scientific community and the financial community, translating not only complex financial models, but also trying to kind of bridge the current climate model sectoral split into something that can be used in the financial sector. I think that will be important in order to drive change in the financial industry. Second thing, in terms of theory of change, I think how we have traditionally looked at mechanisms and levers, etc., I think that will change for many different reasons. And when we see investors taking action, making commitments when we see regulations, disclosure requirements coming in. I think that will also change a little bit on how we traditionally looked at investor impact and the possible kind of levers and mechanisms. And that I'm excited to follow going forward.
Thanks, Peter, for bringing that together. The engagement targets are a really important part and a leading component of the protocol, is the only mandatory component of the 4 layers. So I'd like to just turn to Elena for any final reflections from your side.
Yeah, I think one of the part that is really exciting is that I think that the work on the protocol has really helped investor apprehend the relationship between those engagement targets and the various decarbonization targets, whether it be at the sub-portfolio level or the sector level. And I think that the work has really showcased the relationship between these different components of a decarbonization strategy. So that's a very interesting part. And I will also like to mention that it's an area where I'm sure that the industry is still going to evolve over time, and so we'll be monitoring the work of the industry, and we'll also be monitoring the progresses that are being made in other frameworks. So, for instance, the updates that can be brought by the more recent, well, the upcoming PRI reporting framework.
Thank you, Elena. And finally, Claudia, you rounded us out with the reporting and also our co-lead of the entire track. So any final reflections from your side on the protocol?
Yes. What I think is the most impressive for me is that 30 asset owners, at least at the moment, 30 asset owners came together willing to go this journey together for the next 30 years, committed to that, and found solutions to set targets to which every of us can say yay, yes. So for me, that is the most impressive thing, that we found a common base. And hopefully we can welcome more asset owners who would be willing to join our journey. And with that, not only the Asset Owner Alliance journey, but also helping the real economy to transition to a low carbon environment.
Thank you, Claudia. So the purpose of this webinar was really to be able to answer some questions from the audience, to introduce you to the leads of the different aspects of the protocol, and really to invite feedback and input on the protocol now that you've had a bit more of a chance to familiarize yourselves with various aspects and to ask those questions. So this is just a kind reminder to please, do react to that consultation. The protocol was launched October 13th, and it will run, and the consultation will run until November 13th, so 1 month. There is a set of questions both in the protocol and in an online form. So as you're reading, those questions are linked to the chapter to which they're referring, and then also available to submit through that online form. And you can get that from the Asset Owner Alliance website. We really do value this input. It will certainly help us to work towards finalizing it towards the end of this year, and really hope to have a wide range of input from a diverse group of reviewers. So we very much look forward to that. I want to just thank the audience for their questions and their participation, and for adjustment with the remote nature of this webinar, but also very much thank all of our tremendous panelists. I think having 9 really incredible speakers on this webinar is really a testament to the collaborative nature of the Alliance. And so I want to thank all of you very much. And with that, we will end webinar and look forward to your input through the consultation. Very much.